It's a pleasure to be here, and I can see the email addresses of the folks over on the side here. I can see someone from UW, and I can see some University of Washington, sorry, and from Deloitte. Always good to have some of those folks around. And I'll be happy to follow up in the future to learn more about you because we have a small group, and that means that I can be helpful to all of you after this is over. This is the beginning of a 2-hour class, and we're going to have a 5-minute break at 1 hour so we can all get up and stretch and do those things. It's a real pleasure for me to be back here because I did my first class on this topic. Back then we called it Environmental Management Accounting for the Washington Society of CPAs in 1993. So that's dating me, isn't it? And as you'll see as we go through this, there's a long history to how we got here. And my goal overall in presenting this material is to first of all, to make sustainability real and useful as a concept instead of a vague, emotional, ethical cloud of confusion, which is how it is to most people. We're going to nail it down really tight in this show. I want you to be able, after this show, to know that you can talk to anybody from any industry sector, and then once you know where they're coming from, you can find the sustainability solutions that'll make them increase their performance and reduce their risk and make more money. And we've got the evidence to prove it, but importantly, you're going to be able to do that with pretty much any industry you run into, which is very neat. So moving ahead then. So my background very quickly, I got my undergraduate degree in Harvard in 1983. I got a double master's from the University of Washington, both in business administration and environmental studies. And that made me very interesting to our State Department of Ecology, which had a new program back then to help businesses reduce the pollution they're creating by improving their management and their and the technology they're using. And at the time they had that program, I was the only person they could find that had both an MBA and a master's in environmental science. So I got to take on 112 companies to help them prepare 5-year plans here in Seattle to reduce waste and be more sustainable. That got the attention later on of the UN and the World Bank and others, and I ended up getting hired to move to Asia, where I worked all around Asia and became a professor at the Asian Institute of Management, where I taught operations management and accounting and environmental management. I got invited after that to move to Peru, where I taught the same thing at the Universidad del Pacífico, where I was a professor in the accounting department and also a consultant to a lot of the companies in the region. I got tired of giving people advice that they didn't follow back in the day. So I got into into river turbines, renewable energy, and launched some companies. So I started becoming an accountant with my own business. And after that, recently I decided to try getting back into this topic, which I love, because there's been so much new development about it in the last number of years that it's really become a fantastic opportunity. And so I've started a new company called Sustainability CPE. Maybe some of you came that way. We're developing more courses, partnered with the CPA Society, kind of branding this as made in Washington because there's so many great people to work with here. And that leads me to ask you this one thing that I hope that at the end of this, when we're done, that you'll give me feedback on this course about what made it good, what could have been done better, because this is always a work in process. We're always using the philosophy of continual improvement here, and every class should be better than the one before. So please stick around afterwards or just keep in touch and let me know how we can do things better together. Okay, so very briefly, like I said, this is going to be 2 50-minute presentations with a break in the middle, 8 minutes Q&A at the end. You can download the show, see the manuals, use the chat box. You'll have to respond, as Nick said, to these 3 mid-course polls. You'll get actually not 1 credit, but 2. Sorry, I should have updated that. And so we're going to cover 4 basic parts. Where did this sustainability accounting stuff come from? Because you need to know that it's credible, that it's not something made up, to be blunt, by some environmental organization, as opposed to real accountants. Then today, who is doing what and where, and what are the key players? Because all of the major accounting associations are very actively engaged in this now. We'll talk about how to measure what's important. What is important is very important because, of course, sustainability covers everything, sort of the whole world. What matters here is what's important and material to us in a specific organization. So that's how we're going to approach this. We're going to focus on the stuff that's specifically material to a company or an organization. And the other issues of sustainability, those are for other people to handle at this time. Finally, how to solve the problems, how to implement this, and how to find solutions. Because I want you at the end to think of yourselves as sustainability leaders who can go out and help other people do great things and use this material. Sorry, I went too fast over that. There we go. And that's the wrong side. Okay. So what we've done here is we've created, for your reference later on, a sustainability accounting library catalog. This is a new field, and I've spent the last 6 months researching what the best publications are out of the last 20 years. And I've made a library catalog out of it. So you can download this. It's in your downloads here. And there's 125 relevant publications. They're all free for download from other websites. And you just need to search the internet to find them. But this is the best reading list on this topic that exists today. And I've been doing it for 30 years, so I'm allowed to say that. So who cares about this stuff? Who really cares about sustainability accounting? Well, obviously, there's the big public accounting firms. And by the way, just a week ago, the big 4 accounting firms announced that they're going to collaborate, not compete, to develop a consistent set of sustainability reporting standards, which they will then use with their clients. So the big 4 has already agreed just 2 weeks ago to get really serious about this. And of course, that means that there's not just financial reports, but also assurance, and auditing is now becoming a practice here. So if you're a CPA and you're looking for new ways to make more money, auditing sustainability programs is a real thing. AICPA has published guidance on it, and it's in your downloads. So if you're a public CPA, but your clients are small businesses, well, the key thing here is both is advisory and helping them with their financial reports. And by advising, I mean, tell them, you know, here's what you have learned about the industry and where they should be looking for ways to improve and how to tell people about it. Internal CPAs, of course, are advisory to the management and helping prepare public reports and financial reports. But importantly, when they're advising, they can be advising the company's sustainability or environmental managers. And believe me, those people are really excited when someone else wants to help them. So I hope that you'll take this under consideration, that your partners going ahead are going to be the folks whose job says sustainability something. And they're going to be so glad to know you once you've taken this class. Management accountants, of course, have got to get the data out of the system, and that's where we're going to be talking about the processes to go through, advisory, and then public and other reports. But very briefly, there's a whole bunch of other people, other categories of folks that want to know what's going on here. So investors care about this. The information we're surfacing is very relevant to them, and they use it for risk assessment. Lenders are also using it for risk assessment, and it's in like this. If a company is in an industry that's known to have significant sustainability issues in general, and the banker is looking at you and says, so what's your approach to these issues? And you say, we don't have one. You may not get a loan. So regulators are also concerned about this for policy development and regulation, and they're trying to find ways to create policies that incentivize organizations to do better on their own without having somebody wave a stick at them. Communities are concerned about risk, like what's coming out of your water pipe and what's coming out of your chimney and where's your waste going and what are you doing to our traffic. Believe me, here in Seattle, Amazon has created a lot of sustainability issues, not related to their own performance, but related to downtown congestion and a whole bunch of other stuff. So there's a lot of community input here. Consultants are concerned, activists are concerned. And when you're able to show that, hey, this organization's got this issue under control and here's the metrics, that's a great way to start a discussion with somebody who might otherwise not be very friendly. And then students are excited about it also. And this is absolutely a big deal. In accounting schools, sustainability accounting is becoming one of the most popular topics because it's real. Well, how did it get here? First of all, we'll talk about, I'm going to skip over this, learning objectives. This is something that we're required to put into the curriculum so that you know what you're going to get. And it's too much to explain in the context here, but we're going to cover the why it exists, the what is it, and then how to do it. And you can go back later on to this slide and ask yourself, okay, here's these checklists. Do I vaguely understand what Bert was talking about? And if it's not clear, I can go back and look it up in the download of the PDF. So let's talk on a bigger level. What does sustainability mean for everybody in the world? This has been a horrible, well, very difficult discussion to have for decades. About 15 years ago, the United Nations decided to try to resolve this, to say, what does sustainability mean? What are our goals here? And they came up with this, the 17 Sustainable Development Goals that are now recognized around the world as what are the areas that are most important for us to focus on so we can survive the future. There's 17 of them covering things such as quality education, clean energy, life below water, which is fish and corals, and responsible consumption and production, clean water and sanitation. And what's interesting to me is that every single person that I show this to has one of the or two of these things that's really important to them personally. For me, for example, clean energy is absolutely a big thing for me. And so is life below water, because I was raised by marine biologists and I'm very fond of the ocean. And other ones are not as important to me because I'm just not actively involved with it. For example, I don't work in the clean water area, but I want clean water. Just the same way, organizations will find some of these goals are directly relevant to them and more so than others. And that's what we're talking about, is to measure the things that matter. And accountants have actually looked at this themselves. And the text is a little squishy here, but the International Federation of Accountants in 2015 looked at the Sustainable Development Goals and said, well, what's important to us as accountants, to the accounting community? And their choices were quality education, gender equality, decent work and economic growth, industrial infrastructure, I'm squeezing my, and consumption and production, climate action, peace and strong institutions, and then partnerships. Accounting organizations love partnerships, and that's a good thing. Point is that this is in your downloads, and you can read the logic by which these accounting leaders were looking at this issue of how do we align what we're doing with what the world has decided to do in the Sustainable Development Goals. So now let's look at what's sustainability for business, because this is where we get really specific. And this is where you're going to talk about what you want to do with your clients. Okay, so the Sustainability Accounting Standards Board, which I'll tell you more about going forward, formed about 12 years ago, was created to find a way to create standards for different industry sectors that are unique to those sectors, that are key to their sustainability. And they began with coming up with a universe of sustainability issues. There's environment and social capital, human capital, business model and innovation, and then leadership and governance. And they've broken them down into about 25 subcategories. And these were all picked individually based on this 5-factor test of materiality. Is it material? Number one, is it financially relevant? Number two, is it normative, in that it's something that can happen across the industry and that there's actually some guidance on it? Is it a consensus-based approach? Is this something that the leaders in the industry and in policy and in stakeholders agree that these are factors that really are important here? Is it actionable? Is it actionable? Can you actually do something significant with it? Because, for example, one of our problems here in Seattle is that the traffic is terrible and it affects employee performance and motivation and productivity, but there's not a damn thing any one company can do about it. And so it's, I'm not going to put my sustainability program into gear trying to change the congestion on the freeway. It won't work. And finally, is it open to innovation? Are there opportunities with these factors to really make an improvement that results in increased profit and reduced risk? So as we go forward, we'll be thinking about this as the sort of the shopping list and checklist to begin with when we look at a company or any organization. It could be a city, for example, and say, what are the factors here that really are important that we want to be measuring and accounting for? The goal of all of this is to get sustainability into the financial statements, because when we're talking about things that managers care about, it's what's in the budget and what's in the financial reports. Another way to say it is, if it's not in the financial reports, it's not going to be important. So what I've done here is I've created a generic template in a spreadsheet that mocks up a profit and loss statement. So over here we have revenues, and then we have expenses, a bunch of different expenses. And what I've done is I've broken out the simple category of revenues into a variety of sustainability factors that are important. So for example, what percentage of our products and what amount of money is coming from products that are considered sustainable, like maybe they have a label for it or a certification. What about byproducts? Are we able to sell something that we weren't selling before? For example, can I take the warm wastewater from my boilers and use it to grow tomatoes in a hothouse? That's a byproduct of my heating system. Recycling. Can we sell our waste instead of throwing it away? Can we get carbon credits for reducing our energy use? Can we get free money from the grants? What about renewable energy? Are the solar panels on our roof creating revenue? Again, if these things don't show up on the income statement, why would the boss be trying to improve them? He won't. So surfacing these issues is really important. Same thing on expenses. You look at these in more detail. And so, for example, what was the cost of, how much did we spend on local labor versus distant labor? What amount of our wages were living wages versus low wages or minimum wage? What was our cost for buying energy, and how much of that was for renewable energy? What was our cost for water supply, and how much of that water is coming from some place that might be stressed? So as you see, you can go through all of these and open them up and find a way in to articulate the sustainability issues right on the financial statements that are going to get looked at every month. Same thing in the balance sheet. So in the balance sheet, we've got our assets and our liabilities, and on our assets, we break it out again. So we can say, for example, on fixed assets, which often includes real property, how many of our buildings, what value of our buildings are LEED certified? They're environmental high performance buildings. And as you can see, I'm not going to go through all of these in detail because you can come back to it and study it. And again, on liabilities, here's some interesting angles. For example, how much money do we owe to banks that have sustainability policies themselves so that they care about our efforts? How much short-term liability do we have to local providers versus people out of state? How much of our money is recirculating inside our communities versus shipped out to somewhere else? And also, where are we investing our money? Because our treasury account, of course, needs to be invested. Is the money being invested in a sustainable, risk-adjusted manner? Again, this is the stuff that the bosses and the board of governors or board of directors looks at every month or every quarter. If it's not in here, they won't pay attention to it. So that's your goal, is to try to help your clients and your organizations surface these issues so the important ones can be addressed. Another thing we want to talk about here is how to implement this. And sustainability accounting, it turns out, works extremely well if we just start to realize that it fits well into the traditional model of quality management. Quality management's always been about a circle of continual improvement. It begins with plan, here, do, check, and act. And so when we think about annual reporting cycles, assuming that a company, say, starts in January and pays its taxes in March. So in January and February, the company's done with its annual costing, and now the taxes and the annual reports are being prepared and submitted in March, typically by March 15th or April 15th, rather. And so if we look at that, we can say, well, this is the planning phase for the coming year. And this is where we can start looking into the guidance that's already published on sustainability and educate everybody, the leadership, the team, and start reaching out to stakeholders as well to find out what it is they care about. Then moving into the do part of it takes us into the bulk of the year where we're looking at these different issues and saying, okay, where do we have exposure in these areas, and to start identifying the costs and identifying the metrics, because the metrics also need to be normalized. Of course, you need to know about percentages and change over time to realize what's the context of a metric. And then you can start thinking about the improvement options, which leads to eventually preparing a sustainability report draft. And it says, here are the things we found and here are the things we can do. The next step is check. Okay, and that's assurance. And that's where you might say, okay, well, let's go back and audit all this stuff, make sure it's real. And the AICPA has published guidance on how to lead an assurance engagement and to attest to the correctness of the organization's numbers. And then finally, on the act part, this is where we're looking at actively making improvements. So we have proposals for investment that are both internal, making ourselves better, and then also for external. What are we going to buy? Where are we going to put a new factory? Are we going to invest in a new market? Are we going to launch a new product? That leads again to an update of the sustainability report, which now includes proposed actions, and then those go to the budget. And then at the end of the year, there you have your leadership is now saying, okay, that's what we found out in the previous year. Now we're ready to start all over again. The reason I find this to be a really powerful approach is, number one, it takes a reasonable amount of time to do it, and that's the way people like to do. No one wants to be rushed into this stuff. Second, it allows you as an accountant to have a long-term discussion with your clients and your collaborators about evolving them, because this is a long-term change process, and we want to realize that we're focusing the business to have a deeper look at a broader scale over a longer time. And that's change. And so we have to cultivate it carefully like good gardeners. So we'll come back to this in the implementation section of this seminar. So now let's get into well, now you know where we're going with financial statements and annual implementation. Let's go back and see where all this stuff came from in the first place. So the origins of sustainability accounting. A little bit of storytelling here. So back in 1934, the SEC was created by the 1933 and 34 Exchange Act. And at the core of these acts was disclosure by companies to shareholders of material risks. So material factors that can affect the outcome of an investment. And so the word materiality became enshrined in accounting and now in sustainability for business all the way back almost 80 years ago. Then the next major development was in the 1970s, new pollution control and liabilities laws came along, and they started imposing really big costs on businesses that were not expected. And it caused a lot of old-fashioned industries to go out of business. The chemical industry, for example, saw waves of closures because the small chemical companies were not able to keep up with the requirements for not polluting us with toxic waste all the time. Those led in turn to efforts by the U.S. government and states to encourage companies to prevent pollution rather than treat it at the end of the pipe. And that was called the Federal Pollution Prevention Act of 1990. And then there were state spin-offs, and now most states have rules about preventing pollution through better management. So in the 1990s, this whole concept of states and governments encouraging business to reduce their impacts and improve their sustainability through better management and technology got codified into global programs. And in North America, we call it pollution prevention, P2. And around the rest of the world, they call it cleaner production. They mean the same thing, which means don't create the problem in the first place, do better. So US EPA created a national program, and states created programs. And when the technical assistance people went out to help businesses, what we discovered was, and I was one of them, what we discovered is bad cost accounting is everywhere, and businesses were continuing to not make improvements because they kept saying they're too expensive. And they were wrong, 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 wrong. And I'll tell you why in a minute. But we just found out bad accounting was causing businesses to not do things that made good sense and reduced our pollution, which was like, we want you to do this right, but we want you to make money too. That led to the origins of what we call now environmental management accounting. And a network was created internationally. Professors got into it, academics, consultants. An organization called the Center for Social and Environmental Accounting Research was created in Scotland, and that's now the global center of excellence for research in this area. And here we go. In fact, in 1995, the EPA published a very seminal publication, which of course is in your downloads, called Introduction to Environmental Accounting as a Business Management Tool, Concepts and Terms. And this is a guide that's really written for facility managers to talk with their own internal management accountants about how to get the data they need to make the right decisions so that they don't turn down good, clean investments and they don't make other parts of the business pay for waste they're not creating. In other words, bad overhead management. So in 1996, the International Management the Institute of Management Accountants, they got bent out of shape. This is literally true. They were very annoyed that the EPA had published a guide on environmental accounting, because they're saying, you're not accountants, you're the EPA. We're the accountants. And so they took the EPA's work and they adapted it and made it into an official publication. This is the first time any accounting association ever published anything on what is now sustainability accounting. But this is now 1996. That's 25 years ago, and a lot's happened since then. Now let me tell you my story, because I was trained in ecology and in business, and I was hired by our state's early sustainable business programs to help them prepare plans to reduce waste with better management and technology. And I went out to provide technical assistance for these folks. Because I was the only person with an MBA that understood accounting in the environment department, I got tasked with the technical assistance on the financial part. And I ended up writing the state's own guidelines on environmental management accounting. And I partnered with the University of Washington School of Business and with Boeing and other companies, and we wrote case studies on how to find the true cost of waste and pollution in business. Here's this is a true story. At that time, Boeing was cleaning the paint off airplanes, which they have to do all the time. They have to repaint them. And at that time, they were using a paint stripper called methylene chloride. And anybody that's got a home and has strip paint knows that's nasty stuff. And now it's being really regulated by the EPA. It's a hazardous material and a hazardous waste. Boeing was having a hell of a time trying to get authorization to try new chemicals that were not as dangerous for paint stripping. But they couldn't do it because the new chemicals cost more per barrel than the methylene chloride did. And their own purchasing department said, no, we're not going to buy something that costs twice as much if we don't have to. So Boeing worked with me and a bunch of, 4 professors from the University of Washington Business School. And we and they spent a year investigating costing at Boeing. And we found out that it cost them 8 times as much to manage a barrel of methylene chloride from purchase to disposal as it did to buy it. As a consequence, Boeing was blowing a lot of money on paint stripper that was actually way more expensive than the alternatives that they could use. And they stopped. They got the purchasing department to stop buying it when they understood the true cost. They were able to prove that clean alternatives were actually less expensive on a life cycle basis. And so now Boeing uses a combination of different, more clean chemicals that are not as dangerous. And they also use a new technology. Well, it's not new anymore. It was invented by Lufthansa It's paint stripping with dry ice. They sandblast the paint onto with just like sandblasting, but they're using dry ice crystals which evaporate, and all you're left with on the ground is paint chips and no chemicals. Slick as anything. And so by looking with a new set of lenses at the costs that really exist, they were able to find ways to be really innovative and make everything work better. So that's where I got into this, and I ended up teaching this to accountants. And that's when I went out to talk to the CPA Society here and said, I think we should teach accountants about this. And our first seminar brought about 30 people in. They said, this is great stuff. I'm going to tell my company about it. And I wasn't able to follow up with them one-on-one, but I hope that that led to some good results. So after that, we found out a way to summarize the issues. So bad accounting is unsustainable. And the reasons are, first of all, the accounting system is not recognizing new compliance costs. And also new costs are coming towards us because new regulations have been passed just recently that are going to impose new costs like 2 or 3 years from now. But what happens is when you're not recognizing the costs and you're still having to allocate overhead, what happens is you end up distorting internal pricing. So for example, in most businesses, and here's a great example. Well, Boeing is too big an example. Let's call it a railroad, okay? And they have to repaint their rail cars. So repainting the rail cars is the single biggest cost of toxic waste in the railroad operation. But back then, the cost of running the railroad was allocated across all these different functions. That meant that things like repairing the trains, the cars, was carrying some of the cost of toxic waste management, even though the repairing didn't actually cause the waste. So what happens is if you let environmental and costs related to pollution remain in overhead, it makes the clean parts of the business pay more and the dirty parts pay less, and it literally subsidizes pollution. So bad accounting subsidizes pollution, which is a bad thing. And it also screws up your investment analysis because you don't know how to compare the costs of alternatives properly because the costs are not allocated right. Back then in 1980, this is 1991 to 1995, and back then spreadsheets were still kind of new in businesses, especially smaller businesses. A lot of the investment analysis CapEx was done on the back of an envelope, more or less. On bigger things, it was more sophisticated, but still, a lot of people were using methods that didn't work, such as discounted payback or just simple payback. And here's a phrase to remember. In any inflationary environment, simple payback will always underestimate the benefits of improving your business. In other words, a simple payback will say, oh, well, next year we're going to save $70, but that's not enough. The problem is that the year after that, you'll save $80 and then $100. Simple payback doesn't recognize that. So it always thinks the payback is longer than it really is. Oh, it's a 5-year payback. We can't do it. In fact, it may be a 3-year payback, and you're using the wrong methods. And as a consequence, a lot of good, clean improvements that make more money and reduce pollution were getting rejected by bad math. And that just drove me nuts because it's just, I had a very young baby at that time, and looking at the waste and the pollution around me, I just think these people are messing up the environment for my kid because they're doing their accounting wrong. And I became very passionate about this. And so now I have been coming back to teach you all how to embrace that passion because it makes the world better and it makes your companies more profitable. So the solutions are a bunch of tools. Total quality management tools help us get better data. Life cycle analysis helps us understand how much we really pay from cradle to grave, or as one of my friends from DuPont says, from lust to dust. I think that's a great phrase. It's the twinkle in your eye. It's when you have a twinkle in your eye that you need to start thinking about what the future is going to be, not when the baby's already in the cradle. Total cost assessment means measure all the things that are really happening. Don't just say if it's not in the accounting chart, it's not there. You've got to go find out what's really happening. Activity-based costing, which most of you all know about, is how you stop subsidizing pollution. All parts of the company do not have the same impacts. You need to make sure that the people that are causing, or the processes and the departments that are causing the most problems are paying their weight. Otherwise, you're essentially subsidizing pollution and subsidizing dirty products and operations. We have to use discounted cash flow and net present value, and that's where getting people to understand those tools is really important. There's really only one right way to do this, people. ROI is not it. ROI can get you the wrong answer when you look at cash flows that vary widely over time. Finally, we need to use risk adjustment discount rates, and I'll just give you this simple example. I got two processes. One is a cleaning process with chemicals. The other one is a process with soap and water. And except the soap and water uses a lot more energy, so overall it looks like it costs more. I've done all my analysis, and together they come out to be pretty much the same. And then I have to apply my discount rate. And the discount rate that I use, maybe 8%, says, okay, well, using that discount rate, the water process, it's clean, but yeah, the net present value is not as good. So we're going to go stick with the one we have now, which is more toxic. But if we switch to the water-based process, we are reducing risk, aren't we? Substantially. We're reducing risk of compliance, fines, employee injury, bad reputation. And all those risks go away if we start using the water-based process. So why are we using the same discount rate for a risky thing as we're using for a less risky thing? In fact, when we're investing our money, we know that we're going to get a lower rate of return for an investment that has no risk. The higher the risk, the higher the rate of return. So when you have an investment alternative in front of you and it's going to definitely reduce risk, you should ask yourself, why am I using the same discount rate? I should use a lower discount rate for a lower risk alternative. And that makes the value go up. I can tell you now that CFOs hate it when I say this, because setting the corporate discount rate is a big deal and they don't want anybody to mess with it. And they never have a good answer. I say, you know that you get a lower rate of return for lower risk investments. Why are you not applying that here? Oh, well, it's corporate. So in your downloads, you're going to find two really great guides. One is from the Global Environmental Management Initiative. It's how to incorporate environmental costs into business decision making. And a similar product from a group in New England, the Waste Managers Association. Both of these are really good technical guides how to do sustainable CapEx investment in business. All right, there we go. So the new drivers of sustainability accounting go way beyond just cost. So back in as I said, in the 1995 era, the environmental management accounting was really the main focus of our work. But at the same time, corporate social responsibility reporting was becoming a big trend. And because there were so many demands on big companies for information by reporting to stakeholders and Greenpeace, everybody says, tell us what you're doing. There was a big effort to integrate and standardize reporting on sustainability issues. And that led to the Global Reporting Initiative and actual nuts and bolts guidelines on how to do it. Then a little bit later on, around 2005, the Dow Jones decided to get into this with their own sustainability indexes. And they started rating companies in sectors based on their sustainability. And so, for example, tobacco is an industry most people don't tend to think of sustainable, but Dow Jones thinks that British Tobacco Company is the most sustainable of the companies in the tobacco sector, and they publish that. And they license those rankings and that data to investment firms who use it to build portfolios. As climate change became more important, carbon accounting became more important, and so guidelines came out for accounting on carbon. By 2010, this was a very real thing. Now, along the way, socially responsible investment evolved into now what we call impact investment. Socially responsible investment originally was about not investing in tobacco and guns and firearms and bad things. Just stay away from those. But if you do that, you tend to reduce the size of the market, and you're going to probably not do as well financially. So impact investment is the way that Dow Jones looked at it. Okay, that's to say which companies are doing the best and are having the least impact and the least bad impact and the highest good impact. That led again to more refining of metrics. What's an impact investment? How do you measure it? How do you measure the outcome of it? And we got standardized metrics around that. Then finally in 2015, the International Federation of Accountants and the AICPAs decided, okay, sustainability is a thing. And they started publishing guidance on it. And we're going to see that guidance, and it's in your downloads, of course, but only a fraction of it. In the guidance I've given you, there's 15 roughly downloads, but I've shown you that there's a catalog of 125 references that are ready for you to have anytime you want. The Sustainability Accounting Board took it to the next level of coming up for standards for accounting within sectors, coming back again to that Dow Jones initiative almost 10 years ago. And finally, where are we going? Up here is sustainable enterprise risk management is the future of this entire area. Because risk management is becoming a much more comprehensive issue for businesses. It began with financial controls to prevent fraud. COSO is in fact the name of an organization that's produced the world standards on internal financial controls for fraud prevention. And they've embraced sustainable enterprise risk management because they see the exact overlap in concepts here. And that sustainability risks, for example, a cut in your water supply, they affect everything in the company. So now you need to be managing those risks. And you'll see risk management come up again and again in this. And when you're talking to, as an accountant, when you're talking to your clients and your boss and others, always remember to say, look, this is really about risk management on a broader and deeper scale. And right now, think about all the people that never accounted for the costs of dealing with a pandemic and how many people have lost their businesses and their jobs because they were not ready for this. Now, I'm sure that most people will say, yeah, we're going to be accounting for pandemic prevention in the future. Like, how much are we spending on PPE per year? Well, if the answer is 0, I might want to be finding another job. So what are the benefits that come out of managing with sustainability accounting? Well, the International Federation of Accountants, says it's 3 things. There's a business strategy perspective, an operations perspective, and a reporting perspective. So at the leadership level, you're thinking about important issues like engaging your stakeholders, integrating with risk management, integrating with suppliers. In operations, we're back into minimizing waste. Remember I told you, our basic waste minimization and pollution prevention, and carbon footprinting. And then internal controls and KPIs to make sure that the data is getting into the financial statements. Finally, in reporting is telling people about it. In the financial statements, reporting for investors, having a narrative so you can talk to the community around you, and then having external review and assurance. So these are the benefits that a company gets from starting to use sustainability accounting. And remember, when you're talking to someone that's like, yeah, sustainability, kind of green, woo-woo, I don't believe in climate change, you can show them this. You can say, look, this is what the Federation of Accountants has already published. Don't argue with me. Argue with them. You want to argue with the Federation of Accountants? Good luck with that. We know which one has got a better credibility. So, part 2, sustainability today. Who's doing what? So there are 4 major players, and each of them has published a lot of great materials, and we'll go into how to use them in the next hour. So at the top of the pile is the International Federation of Accounting. So they used to be accounting confederations, and now they just call it Federation of Accountants. They've published guidelines on both the big picture and very specific things. Also, the AICPA, you all know them, Institute of Management Accountants, Chartered Global Management Association, Accountants Association, the Certified SEMA. I forget. There's a dozen of these, and I get them confused sometimes. But these are the leading federations that are publishing directly as accountants to accountants. Now, another organization that's very important now is called Accounting for Sustainability. It's a UK organization, and they're focused on the evolution of the accounting and finance function in organizations. How do you get from where you are now to where you want to be in the future? So they have a different set of lenses on this. They're not about how do you measure and normalize water use. They're about how do you incorporate the tools into standard accounting practices and then evolve the practices so that they lead to better organizational outcomes. The Sustainability Accounting Standards Board is now a major player in this. And so they've been around, they published their first standards 5 years ago, and now apparently they say 90% of the Fortune 1000 companies in this country use their metrics. That's going to end up driving this into GAAP. Okay, eventually these standards are going to end up affecting FASB rules. It's guaranteed. And it's already shown up in some arguments from, I won't go into it, but some arguments with the, on pension fund management. And how do you, what metrics have to go in there? Pension funds are very concerned about sustainability, as they should be. And then the other group is called the Global Reporting Initiative. And their focus is on metrics that are relevant to all stakeholders. It's not just to the investors and to corporations. It's what are metrics relevant to communities? What about to the natural environment? What about to policy and regulation? What about to human rights? Okay, so they have published a lot more depth on this stuff, including very technical guidance. I mean, if you want to get your engineers into this, is a great place to do it. So these are the big four in sustainability accounting, and all of them are worth looking at. They all have websites. They've got great offers, webinars, videos, training materials. It's great stuff. So let's take a look quickly at IFAC. So their foundations are publications on environmental management accounting. These are technical guidance. And then they've also published environmental frameworks, and so and how to find different types of solutions in business. And I'm going to mention the framework one here. This is the big one. All right. So the IFAC Sustainability Reporting Framework needs to be in your. Oh, sorry, I went back too fast. Needs to be on your bookshelf or in your head, or you should have it, and you should understand what's in it. So again, it talks about three perspectives on business strategy, operations, and reporting, which I just mentioned. And it's a deep dive. It's 194 pages in total into the elements of each of these perspectives. And here's where they've done something fantastic. For each element, they have a section called Key Considerations for Professional Accountants. This is what you, as an accountant, should be thinking of doing. This is, so you want to look at this, and this is where you go to find your instructions on what to do on a problem like, how do we account for labor wage fairness? How do we account for it? They have the answers right there. So that's definitely a first stop on your reading list. Like I said, it's a heavy load to go through all at once, but so I recommend you take it and you scan it, and then come back to it. So you use this first. The way to use the IFAC tools is you read the Environmental Management Guide, which you have in your downloads. It'll get you at the roots of this, which is the numbers from operations that affect pollution and waste. So, and it also talks about how to make your investments properly and don't reject good things for bad math. And then look into the framework and start understanding that. And then how do you match the recommendations for accountants to your specific client? If your client's a real small business, many of these things are going to be just overload for them. They won't be able to cope. But if they're a bigger company, there's probably really great room for improvement and for training the company's own accountants how to do this. There's a huge amount of consulting opportunity in this space with these tools. So this is kind of funny. If you want to get people's attention in the CFO room, and if they're questioning the benefit of, like, well, who cares about this? What do you mean accountants are into sustainability? You can do this. You can print and bind the whole framework, 194 pages, into a ring-bound big chunk of paper that weighs 3 pounds. And then you just go drop it on their desk and say, I read this so you don't have to. And then you can have a good discussion with them. But that makes it pretty realistic to people. They go, this is not Greenpeace. No, this is not lightweight. This is, oh my God, I have to pay attention. All right, it's a good trip. So the Accounting for Sustainability project is a little different. All right, it's got a series of guides, and what they have done is they've taken an approach to different topics, and they talk about. Well, I'll show you what the guidance is, but what they are is essentially targeted to the CFO. All right, not to a management accountant per se. It's to the CFO, and that's important because many of you think about, I'd like to be a CFO one day, perhaps, or maybe not. But this is how you can show a regular accountant, your colleagues, etc. Say, if you want to have a higher level, like be the manager of Deloitte, this is where you're going to find your guidance on how to grow into that role. And this website has, I'm sorry, this is not showing up in very high resolution because of the framing of the slide on the screen, but it's in your download. Right. And this is just a snapshot of one of the pages in the guides. And it's showing several different functions, processes, governance, performance management, technology, and data. And this has to do with strategy. And then this is the evolution. So from here where we are today, it's not very integrated. To sustainability is fully integrated into these key functions. And here are the bullets that are check marks to see where we are. Are we here? Are we here? Are we here? We're not. Nobody's here yet, but we're going to go from here to here maybe this year. That'd be great. So it helps you build out your schedule for improving. And that's what we call their maturity map. And they have maturity maps for a bunch of different functions, and they are really neat to read. And a tremendous amount of thought went into these. The group has been around since 2002. Some of the smartest minds in accounting in the UK and Europe have been involved in developing this. And their website is rich in video, webinars, downloads, just a great site to go dig into, because they're really looking at how do we transform accounting into sustainability leadership. And I think that's what you'd like to be able to do too. So how to use their site? First of all, use their entire website. There's a lot going on. And interestingly, they have had very little activity in the USA, and they've recently started an American Leadership Council. And about a dozen CFOs from major corporations like Salesforce and Intel and Mars and others are already members. And they've got videos on their website of these CFOs talking about why sustainability accounting matters. Those are great to have for seminars and presentations to boards of directors and to the C-suite. So put on your, think of this yourself as a CFO. I want to be leading, not just accounting. And so think about it as a CFO where you can be more of a management consultant and advisor to your clients than just an accountant. And then scan through all the essential guides. There's 9 of them. Scan them. I mean, there's a lot of reading there, but make sure you understand what's in them, because you'll come back to them again and again. I'm going to mention that 2 of the guides, Engaging the Board and Debt Finance, they are unique. There is nothing like them that I have found published anywhere, and believe me, I looked. The videos about these are worth watching, and like I said, I would really look at this in Engaging the Board, because if you can't get the board of directors on your team, are you going to succeed? Probably not. And I want to mention one other interesting example. They've come up with guidance on factors that we normally don't know. Say, what, accounting for this? What do you mean? So here's this: social and human capital. What the heck does that mean, and what do you account for? Well, you may not be able to put numbers around these too well, but factors, for example, in your license to operate, responsible tax policy. For example, a metric is how many times have we had to argue with the IRS? More arguing means we're maybe not being very responsible. Under working conditions, fair trade, forced labor, health and diversity, working hours. Are your staff actually getting paid for the work they're doing? A metric about that is actual hours versus paid hours for remote workers, because you may have heard in this pandemic, a lot of remote workers are actually working longer than they did when they were at the office, because when they were at the office, they had to go home on time. So work hours have gone up about 2 hours a day, it seems, from a lot of organizations. Accounting for that's really important. But here's the guidance for it. It's fantastic reading. It's fascinating. And you'll have a way to really articulate a very complicated subject. Now, the Sustainability Accounting Standards Board, I'm going to come back to this in more details, but very briefly, they're answering the first question, account for what? In business. Okay? I can't account for everything. I need to account for the things that matter. What are they material? Would they affect the decision of an investor? Okay, this was founded in 2011, so this is now almost 9 years old, and it's very real, and they're really making a difference. However, it's not an accounting organization. It's a private nonprofit. It's not regulated. It's not FASB, but its recommendations are being used now, and because of that, it's going to end up into FASB and to GAAP eventually. And so SASB you want to be familiar with now, because what they do now is going to affect the future. And if you're in advance, you're going to be the expert and you'll get hired. And again, the stands are material metrics, what really matters, and they're sector specific so competitors can be compared. That's the key to this, is to make sure that you're able to know, okay, I used 100,000 gallons of water this month. Is that good or bad? It depends on what business I'm in, right? How am I doing compared to my competitors? So their system is quite focused on business performance improvement within the company and benchmarking. And they have a wonderful tool, which is online, and you're going to get off this website. And after the seminar, I encourage you to go play with it. It's called Materiality Map. SASB's got 77 sectors they've written standards for, and they've got a website in which they've made all of them easy to find really quick by clicking. So what they've done up here is they've got these major sectors here, and then with each one they have subsectors. In total, there's 77 subsectors. So to begin, I click on the food and beverage sector, and up pops these subsectors here. One of them is restaurants. Over here, I have all of the SASB sustainability metrics that are of concern, and what they've already done for us is they've pulled out and said, this is the metrics that are important to restaurants. If they're in dark color, they're very important. And if they're gray, they're medium importance. And if they're white, don't worry about it. Isn't that a nice thing to hear? You don't have to measure that. Now, we'll get back to that. But essentially, they've done that for all these different industries to show how to get it. So when I do that, if I click on one of these boxes, boom, what happens is up comes the actual metrics that they're using. So here we have for restaurants, the topic is food safety. And the accounting metrics are things like percentage of the restaurants that are inspected by a food safety organization, percentage receiving violation notices, percentage of recalls, percentage of food that's locally sourced versus not. All of the metrics, and there's 7 out of these, okay, here, are relevant to that topic in food safety and metrics. And you can see them right there, and they tell you how to measure it. Isn't that neat? And what's fun to me is that if I'm going to go talk to anybody in any business, I can go to this materiality map and say, okay, the fellow I'm talking to is in the maritime business. Okay, maritime is under transportation and logistics. I go there to see what are the metrics for that, and then I can go in and talk to them and say, is it true that you guys have got serious concerns in the following areas? And they kind of go, oh, you did your homework. Yeah, I used this cool tool that took me, 20 minutes. But it's very educational. It's the fastest way to learn about what matters in any industry that has ever been existing in the world. Beats the heck out of looking stuff up online on your own. So with SASB, you do the same thing, a process. You study the site, learn what's there. There's a lot of there. Then use the lookup tool on the materiality map to find your sector. Download the standard for that sector, review the metrics, and then help the client decide if reporting the metrics and measuring them is actually advantageous. And sometimes they are, and sometimes they're not. And maybe because the company is so small, it doesn't matter and it's not worth it. Or maybe they're just in a niche where something is different. So it's a way to have a discussion using the materiality map, because it's fun to click on this stuff. It's very visual and very engaging to sit down with a client and walk them through that. And you can say, well, is this an issue for you? And if they say yes, well, let's look at how they measure it. And finally, SASB has its own Fundamentals of Sustainability Accounting course and certification, which I have taken, and I'm now a certified. My wife says I've been certified for years. But it's about $1,600 total. It takes about 40 hours of study. It's a heavy lift. It's not a CPA exam, but it's enough. And you get a certificate. They recognize you on their website. And so it's a great credential, and it really helps you become very, very familiar with this whole concept. The last of the big four, and then we're getting ready for our mid-course break here, is the Global Reporting Initiative. And so they're a global nonprofit that's producing generic and sector sustainability standards, and they're also developing the technical accounting metrics. How do you measure it, and what do you report? Now, how big is this? 63% of the largest 100 companies in the world, 75% of the global Fortune 250 are using these frameworks. So if the big boys are using it, the little guys should pay attention, and that's a very important argument to make to your small clients. They developed this with huge input. The number of organizations and the variety of them that's providing input to this is astonishing, and it's been a 15-year process. So it's very authoritative, it's global, it's recognized by everybody that matters in this business. And then finally, they have a sustainability disclosure database that lists over 1,500 company reports, and you can search it by sector, country, and more. So as we'll see in a minute, you can use it to go find out. So, maybe I'm advising a man who owns who owns a hotel. I can go to the disclosure database and find the sustainability reports from a bunch of hotels and show them to them. So this is what the competition's doing. And that's great because it makes you authoritative and it's easy. So how to use it? Again, they have 3 sets of universal standards, which is basically the foundational group. Then there's reporting and then analyzing it. And then they have a number of other ones that are some 83, I think. I'm sorry, 33. That's right. 33 topic-specific standards covering environmental, social, and economic areas. So when you've done your look at the SASB standards, then you can go look at these standards and see, are there additional ones to add in? So that's how you use this. And I want to just show you the sustainability disclosure database again. So what I've done here is I've decided to say I'm interested in helping a guy with a car company. And so I want to know, what have car companies done about sustainability? And I can go in here, I select North America and automotive, and I do a search, and I find over 100 entries of automobile companies that have published sustainability. And each one of these links here is their sustainability report for that year. How about that? So I can click on it, and there's a link shows up to Harley-Davidson's annual sustainability report. And next time I go talk to somebody who's making motorcycles, I'll say, you should look at this. And he'll think, wow, that's amazing. How'd you find that? Now you know. This is also very relevant to all of us here in Washington. These are Washington organizations that are actually publishing according to these standards now. And there's Nordstrom's right here in front of us. Waste, fleet efficiency, water, paper, treasury and bond giving, renewable energy, energy, and human rights. These are their core metrics they've decided. But look who else is in here. Starbucks, Microsoft, Nordstrom, Boeing, Amazon, Alaska Airlines, and King County, City of Issaquah. How varied. So these are in real use. And when you feel like you want to get some help, you can always call up these companies and say, I'll talk to your sustainability chief. They're always glad to share what they know because they all realize we're in this together. So finally, GRI, how to use it, and then we'll take a break. First of all, you identify the industry sector. You use the SASB guides to find the material metrics. Then you download the GRI standards around those metrics. And then you search the disclosure database to find who's actually published things using those metrics, and they'll tell you how they are accounting for sustainability in their business. And review the reports that are most relevant to the client. I mean, there may be a lot of reports. You don't need them all. Okay, part 3. We're going to take a 5-minute break. It's 3:05, and I'm going to start again at 3:10 exactly. So now you can get up and stretch your legs, get more water, and we'll come back and dive into the how-to. I hope you feel like this is going well. I welcome your comments in the chat box, but I'll see you at 3:10. Thanks very much. And I'm going to go to the bathroom and get some more water.
Sounds good. Hi, everybody. This is Nick here. So I am just quickly going to note that an attendance verification, because they are randomly timed throughout the full time, may play during this 5-minute break. We play extras, though, so if that happens, don't worry. You're not going to be penalized if you miss that prompt. So please, if you need to get up and walk around a little bit, feel free. And if you do hear a ding and come back and click it, that's fine, too. Just wanted to give you that warning so you aren't surprised in the other room hearing a ding from your computer. So enjoy the break, and we'll get started here in about 4 minutes. Just to let you know, Bert, unfortunately, it seems like your mic may be off. You may need to restart it. That might be just a bug with the system. Oh, there we go. I think we have you.
Okay, can you hear me all right now?
Sure can. Sorry about that, everybody.
Okay, glad to have you back, and thank you to our friend from Deloitte for the nice comment. Good. Okay, so materiality, what matters to a specific organization in a sector? And before I begin this, I'm going to, in preparing to promote this course, I started using LinkedIn to dig into how many people in Washington State have sustainability in their job title in any context or in their job description of what they do. And it's on their LinkedIn profile. The answer is more than 15,000 people. That's 15,000 companies and organizations that are trying to be sustainable, and they don't know how. And they've never taken this class. Across the country, the number of people on LinkedIn that are senior managers, directors, owners, VPs, etc., and sustainability is in their job title is over 100,000. And there are over 2 million people on LinkedIn that have got sustainability in their profile. And 15 years ago, there were zero. It's going to just go up. So this matters to a lot of people now, and becoming an expert in it is going to give you an advantage that is going to be really unforgettable. So back to the quick disclosure, the SEC and SASB. Again, the Sustainability Accounting Standards Board is not an authoritative regulator, government endorsed organization, but their standards are going to get included eventually in materiality. So right now, SEC says a topic's material, if lack of disclosure about it, could affect the decision of an investor and the total mix of information they've got. SASB defines sustainability the same way. If you don't mention it, could it make the investor make a decision? Because if they didn't get the disclosure, they can sue you if you're a public company for not disclosing the risks. So we want to make sure this is very important. So when you're talking about, if you're a public company, it's very important to make sure that topics that are discussed in sustainability are also discussed in 10K disclosure and on the management's discussion and analysis. Excuse me, I'm going to sneeze. And so again, coming back to the dimensions of sustainability capital, there's 5 of them. There's environmental, social, natural, leadership and governance, and business model and innovation. And each one of these, it's very important to make sure that a corporation, a public company, is not vulnerable to accusation that they're failing to disclose information because the sustainability report says it, but the MD&A and 10K doesn't. Why is it so important here but not over here? So that's an alignment issue that's very important in the concepts here. So the criteria for topics is there investor interest? Is it cross-industry? Does it affect value? Actionable? Is there consensus? And then from these topics, they come up to what's material in them, and then they come up with a standard, it's a dimension, an issue, a disclosure topic, a metric, and a protocol, how to specifically do it. Now, I'm going to just revisit this very quickly because you've got it written down here, and I'm not going to read them all to you because you don't want me to do that. So let's look at examples for restaurants. Everybody knows about restaurants, okay? And restaurants can be very large corporations. They're corporations, they're restaurant companies. And it could be McDonald's, it could be Pizza Hut, or it could be the little company down the street from your house. So here we have the SASB metrics for restaurants. And so this is what's interesting. So what they've said is the metrics for restaurants that are most important are energy management, water management, food and packaging waste, food safety, a variety of things, nutritional content. Obviously, that's one we care about. And then labor practices and supply chain management. And then each one has a subsector, a subheading with a specific metric. So if I'm looking at restaurants, I say, okay, these are the checklists. But now we have to realize this is a checklist. Reality is often different from a checklist. For example, what about pizza? Pizza companies have an issue that's different, and it's not considered material by SASB. And the reason is because pizza restaurants have huge ovens that are on all the time. And so those are point source air pollution point sources, I'm saying it backwards here. And they're regulated by the local governments and by the EPA, and they have to have air permits for how much they can smoke they can put out. So for a pizza company, air quality and air emissions are in fact a big deal, and so is carbon emissions. So you got to look at a sector and say, all right, well, but for my company that I'm helping here, what's actually going on that we need to worry about? So other sources for material information besides SASB, what matters is sector leaders and competitors. Again, benchmarking against off these reports. And there are reporting databases that you can look these things up. Social reporting databases. You can Google that and find a bunch of them. And there's also news sources such as CSR Wire, which is the most popular, I guess. Is every day they've got updates, press releases and stories about what large companies, mostly large companies around the world, are doing around social responsibility. And then there's publications on pollution prevention and cleaner production, and I'm going to explain that separately in a minute because that's really interesting. You're gonna learn something very surprising in about 5 minutes. Then there are nonprofits and award programs. That's a great place to look to say, okay, well, somebody, some company over here that's in my sector, they got an award from the local government or from a nonprofit for good things they're doing. What is it? If they got an award, how do we get an award? That's pretty nice. So you can find a bunch of different places to get more information, and that all goes into the overlay on the SASB standards and the GRI standards to say what is important for this guy, or sorry, this person. Now, the hidden world of sustainable business. This is my secret slide. No one else in the world, I know this, is to my knowledge, is explaining this. So there are two phrases that open the door. Two magic phrases that mean the same thing: pollution prevention and cleaner production. Both of them mean use better management and technology to prevent the problem from happening in the first place. That's exactly what they mean. Okay, prevent pollution with better management. Make your production cleaner with better management. But the difference is this: pollution prevention is a phrase that was invented by the US EPA in 1990. And it is relevant only as an information indicator for North America, because Canada uses it too. The EPA created pollution prevention programs in every state, and they provide regulations and assistance. And so the assistance is leading to solutions. And the solutions are all called pollution prevention solutions, and they're only from North America. At the same time, the United Nations decided they wanted to do this too, but they didn't want to call it pollution prevention because I don't know why, but actually pollution prevention turns out to be a terrible phrase in general. So they called it cleaner production, which has its own problems. Many people think it means you make soap, you make cleaners. So they started promoting it in 1990, and now there's cleaner production national programs in 48 countries, managed by supported by the United Nations, and by environmental and assistance programs in 40. Tens of thousands of organizations exist under the label of cleaner production. They also do assistance, but they're not typically so focused on regulations, but rather on transferring knowledge between countries and sectors. Whereas in the United States, because we're so regulated here, you have to deal with the regulation part. Whereas, in Lebanon or Ghana, they're not really very focused on the regulation part. So with cleaner production, when you want to know about solutions, you get solutions from everywhere else besides North America, if you use that word. And with pollution prevention, you get it all from North America. So let's see what that means in practice when we're looking for things. Okay, so what I've done here is a search for restaurants, and I want to find solutions for restaurants. So what I've done here in Google, I've typed in pollution prevention in quotes, and then restaurants. I did a search, and I got 776,000 results. Pollution prevention for businesses and restaurants, restaurant program, sanitary, pollution prevention for restaurants. How does your food facility service? Food services and stormwater. 700,000 possible references. And obviously with Google, the best ones are going to be the most cited, so they'll be higher up in the search. But now let's do the same search for this using the phrase cleaner production. So cleaner production in quotes and restaurants. And now I get 530,000 results, and they're all different from these results. There's like zero overlap. All of this stuff is published by organizations outside North America, and this is all from inside North America. Isn't that nuts? So I can combine the search, sort of the restaurants, and this is actually the search syntax, sector and pollution prevention or cleaner production, and I get 1.5 million solutions instead of 700 or 500,000. And the crazy thing is that the solutions that are coming from, well, it's not so crazy, it's actually logical. The solutions coming from the cleaner production side here, many of them are coming from developing countries. And so their approach is often a whole lot more innovative in terms of low-level, low-tech solutions and interesting ways to get people involved than you'd find coming from industrialized countries, United States and Canada. So it's really interesting to look for any sector, look at how both of them show up in these searches. And then finally, I didn't put it on the slide, but I should have. The leading journal for sustainable business solutions in the world is called the Journal of Cleaner Production. It is possibly the most cited journal in the world by now, Journal of Cleaner Production. So I encourage you to write that down, go find it and look that up and start realizing how much you can find in there, because it's an immense resource, and you can search it by keyword, by your sector, and find out what's been published on solutions. So now you know about the hidden world. Most people in the United States and everywhere else, nobody says these things anymore, because pollution prevention and cleaner production, those were the names of the government programs, and they've been discontinued. Sorry, my seat's collapsing underneath me. They've stopped promoting it. And as a consequence, nobody really knows, unless you're old like me, that these programs even existed. And you don't know where to search. You wouldn't know unless you realize that this word and that phrase, those are the magic words to Alibaba. Open up the hidden world of solutions that you'd never find if you didn't know to use those words. 30 years of solutions, ready to go. So let's talk about the sustainable accounting cycle in a restaurant chain and how that works. So as I said, we originally talked about this, and I won't recap it too much, but again, the key here is that people don't respond too quickly to change. It takes a bit of cultivation there. And they like to see that they're doing things in an organized way that leads to an outcome that seems predictable. This is a big deal, because anybody that's tried to do any kind of improvement program in any type of organization understands that when it appears chaotic and unmanaged, nobody wants to participate. So showing this as a framework is great, and especially if you're an accountant that's working with a client who has annual financial reporting. This is the best way to integrate it in sustainability and finance. We start off with leadership, training the leadership. So this is where I'd be in there talking with them about that board of directors guidance from Accounting for Sustainability. I'd be talking to the treasury team, which we have a guidance tool for that. We saw that earlier. And I'd be finding my sustainability metrics, okay? And I'd be looking into these resources I told you about. to figure out what it is we're supposed to go look for in our sector. And that's enough time to get you through March. Then you start looking, okay, for each of the metrics that we're told are important, let's go see if they are, and if we're missing some metrics. And you can follow the published guidance for each one of these 5 areas from the Accounting for Sustainability group and from other organizations, and which leads you to identifying what can we improve? What are we missing that we should do? And what can we improve that we're already doing? From there, that leads you to making a report. It's a draft. It's a draft that allows others to see what you're doing, and you compile it. And then you need to have somebody take a look at it hard and audit it. Well, not necessarily audit, but make sure the numbers make sense. And one way to do that is to let a lot of stakeholders see the report, not just internally, but externally. For example, the banker and your insurance company. And you can say, what do you think of this? And they're going to be saying pretty much, they're going to say, wow, you're really getting into managing risk here. I like that. And the community will be saying, wow, you're really trying hard to be better. And we like that. And why don't you also do this? So then you update your report. That leads to finally to the action section where you're making proposals, internal and external, and then you're making your final report, which goes to management. That report then informs leadership for the next cycle. I think this is the most powerful way to engage a client because you can get into useful stuff really quickly just by educating them in the early stage and showing them, for example, reports from the competition or other leaders in their sector. You know, let's say I'm a company, let's say I'm a Seattle area hotel company and I own 4 small hotels. Right here is where I'm going to say, I want to know what Hilton Hotels and Marriott and the big chains are all doing on sustainability. And you can help me get their reports and tell me what they're doing. So right away, I'm motivated. I want to be as good as the big guys. So that's the framework we want to think about implementing in it. And so now what I'm going to do is just walk through the plan, do, check, act cycle quick and show you some of the key references and some of the key issues that come out as we're going through this. And I'm going to try to remember to be a restaurant owner. I'm going to try to be, let's see, we're in Washington and one of our favorite chain restaurants is Anthony's Seaport Restaurants. Big restaurants too, with a lot of operations, a lot of people, a lot of material flowing around. So the first thing I'm going to think about is I want to make sure the CFO of Anthony's is aware of what they can do, the power they have. And in my guidance, I've got, here's a great product. It's from the chartered, certified, I forget which one it is. It's in your book, Sustainability Performance Management, How CFOs Can Unlock Value. This is a publication from an accounting association specifically for CFOs, spelled out in pretty simple language. It shows them how to be a leader and make it advantageous. And then also the Essential Guide to Strategic Planning, Budgeting, and Forecasting. This is really down in the weeds. This is a moving your organization from here to here. And so this is one I'd start here. I'd have them read this one and then figure out on their own maturity map, where are they in the growth phase. And in terms here, we're trying to engage the board, the leadership. And by the way, this would also mean, don't just think about the board of directors. Think about who's the banker for this company. Who's their insurance agent? Okay, those are the people that are really, you got to make sure they're on board here. Then the team, and the team is going to be broad because it's not just accountants, it's going to be compliance, it's going to be operations people, it's the management accounting staff that are consolidating the data. And then finally having a plan to engage the stakeholders around the company. So for Anthony's, they're going to be concerned about, well, you know, what is in every restaurant we're in, does the manager of that restaurant know about who's in charge of sustainability in the town, in the local government? Because the local government wants Anthony's to be sustainable, and they'll help. They may even have money to give you for things like energy and waste improvements. So one of the guidance tools here is that it comes out of the accounting for sustainability here is, again, focusing on an improvement cycle here and sustainable project management, and making sure that you're using this in a predictable, transparent way, and so that you can put this up and say to people, we're now here and we're going to go to here next, and this is going to be your role, and this is the kind of cycle and planning forward where, again, you can build a very effective consultancy proposal around this, by the way. And another one of the planning techniques is, here's another recommendation from the A4S. How do ESG factors fit within mainstream risks? Remember how I said in the beginning of this class that enterprise risk management is the future? This is it. Okay, mainstream risks, these are sustainability risks, and here they are boiled down right into check marks. You can use these to engage in discussion. Make sure things are not left out. Okay, we can bring up another. Now, another thing about the team here, okay? So we're working through planning in a step-by-step here. When you're talking to the team, you're talking to people in a company. They're people, right? And their motivations are different from depending on where they are. Very few people in a company are excited about helping the boss buy a new car because he made more money. Their definition of sustainability is quite different, and I want to show you this important thing. So the Hartman Group in Seattle is a company that focuses on sustainable foods. And about 8 years ago, they did a study following consumers around in stores and going home with them and looking in their pantries and generally being very nosy, trying to find out what are the words that consumers use when they're thinking about sustainability and values of products that are sustainable. And these are the words that really matter to employees as consumers. At the core, there's a brand and authenticity. These are the fundamental things. So, for example, Odwalla Juices, their brand is organic and it's authentic, etc., versus Kool-Aid, which doesn't even try. And at the other extreme out here is the standard things that everybody is concerned about: price, convenience, and comparability. These are the ways we talk about, what do we care about in a product. What's interesting is in this mid-level where things cross over, because here we're talking about what's the personal benefit of the thing to me, how does it engage me in community, and how does it increase my network knowledge? Because the more my hands are out there, the better I'm anchored for success going forward. I don't think about three-legged stools, I think about centipedes. You can knock over a three-legged stool, but you cannot knock over a centipede. And it's about resilience, okay? So think about the words that the team likes to hear and present the proposals and the program in their language. So they go, yeah, I like that. This is available as a download also. I'm still checking with the Hartman Group if they don't mind if I give it away, but I think they'll say yes. They like sustainability accounting a lot. And so this is now another tool for sustainability and team building. First of all, the one I'm quoting out here, the Global Environmental Management Initiative is a consortium of about 80 of America's biggest industrial companies, created over 25 years ago so they could collaborate on solutions to these big environmental costs that they're all experiencing. And a number of years ago, they got together and said, sustainability is important, but our employees don't know what the hell does it mean? What are you talking about? So they created a training toolkit. And it's a series of 4 PowerPoint presentations in a zip file that walks the employees right through it. And it's in your download, so you can walk through it yourself. And then when you go to see your clients, you can say, well, we'd like to explain sustainability to you, but we're going to use a tool that comes from an association of America's biggest industrial companies prepared by their own compliance and sustainability directors. This is not preaching from a nonprofit. This is not preaching by Greenpeace or Friends of the Earth or anybody else or the Sierra Club. This is what the big boys are really doing and really talking about. So that's your credibility. It's industry based. And it's also a lot of fun to walk through it, by the way. The other tool is this one called Community-Based Social Marketing, and this is an ebook, and this is the best tool, best book I've ever read on how to manipulate other people into doing what you want. Really. And it's about changing behavior, and it breaks down the whole process of systemic behavior change into 6 major functions and tools that are used to make it happen. And it's in your book again. Please read it. You'll find it to be fascinating. It's based on experimental psychology and experiments done in recycling in the 1990s to try to get people to recycle more. But the lessons learned are fantastic, and they apply to changing behavior of groups in anything. And so when you get into team building, that's where you're going to be thinking about, I want the team to change the way they think and behave. And this is my guidebook on the tools to use it. And again, I think it's a great book, and there's workshops that the fellow teaches on it. You'll find lots of references on how to get people to do what you want. Okay, stakeholders is the last of the planning groups here. And several guidances. So these are in your tools. Okay, so the World Economic Forum has published a great tool called Engaging All Affected Stakeholders, how to get out there and talk to all these different people in ways that don't increase your risk and that get them really involved in being positive as opposed to confrontational. And then finally, a group called Accountability out of the UK has got an actual stakeholder engagement standard. Now, accountability is not actually an accounting organization. They want companies to be accountable. And this is their based on experience, guidance on the best ways to go out and interact with it. So when I'm the manager of Anthony's restaurant in Edmonds, which is one of my faves, I'm going to look at this and say, okay, this is my guidance on how to go out and deal with the community in Edmonds. And I'm going to make sure I'm not overlooking anything that I should be doing. Nobody taught me how to engage stakeholders before. Well, now I know. I've got the tool here. And then finally getting into the materiality list. We've covered this pretty quickly, but that's the final part of the planning. You want to make sure you use all of the tools that I've showed you to go through this and figure that out. Now, here's an example of a water treatment company, a global company, and here they've done a materiality map. Potential business impact from low to high, and stakeholder interest, low to high. And now they've taken these factors and they've mapped them out, and they're looking at, okay, well, high impact and high concern. Water, greenhouse gas, land, biodiversity, indigenous peoples, because they're treating water in developing countries. Okay, and things that other people don't care about is like product safety. That's sort of covered by the fact that they're producing standard water. So this is a nice way to organize your materiality factors. And again, there's more guidance in this there for you. Okay, let's look what we're to do. The do part. Here we go. Oh, sorry, I skipped past that too quickly. All right, this is a simple checklist for this. Okay, when we're talking about the 5 capitals here, environmental, social, natural, business. Okay, these are the 5 sustainability categories for metrics. And for each one of them, the process is the same. You have to analyze the processes that are being used, validate the data that is showing up, because when you go and dig into this, especially on things like environmental, like for example, pollution discharges, chemical use, PPE equipment, you need to make sure the data is real, because a lot of the time what's showing up is not real, or maybe it's just old and people think something's happened and it's not. For example, I went to a company here in Seattle, one of its last remaining manufacturers downtown, and to talk to their environmental person at their invitation. And before I went in, I walked around the building and I counted all of their dumpsters, because there they were. And so when I sat down with them, I said, so, well, what's your waste disposal cost? She said, well, wait a minute, hold on. Let me see. We've got 3 dumpsters and maybe 3 accounts. And I went, but you have 5 dumpsters. She said, no, we don't. We have 3. I said, you have 5. I just saw them. She said, how's that? I said, how long have you been working on this job? She said, about a year. I said, who was the facility manager before you? She said, another guy, but he got fired. Oh, really? He was fired. Was he stupid? It turned out that company had had 4 facility managers in 4 years. Something was going on, but the data that they were promoting was wrong. And as a consequence, it turned out that they were paying for 5 dumpsters, and they thought they were paying for 3, and their accounts were wrong. When I told them about this, they realized that they could probably get away with 2 dumpsters. They went from 5 to 3, and they saved $70,000 a year because I counted dumpsters. Don't believe what they say at first. Go see it for yourself. Then you need to know what are the material metrics. We've gone over that. Do a cost and risk assessment, and then innovate and estimate. So it's a standard process for each one. Your goal is to come up with solutions, not just to find data and report on it. Then the check part, again, is pretty straightforward. It's, accounts understand auditing and assurance. And the AICPA has published guidance on how to do that. And you can use the tools you've learned here to run the assessment. And they also offer an actual certification in this. So as an accountant, you can go to AICPA and take one of their certification courses and have this. And then you can go to any company that's trying to be sustainable and say, would you like me to tell you if you're doing it or not? Great opportunity here, and very, very few accountants know this even exists. Then on to updating the chart of accounts. Again, we said if it's not in the chart of accounts and it doesn't show up in the financial statements, it's not going to be important to the management. So you want to take your sustainability metrics for your industry. Remember we did this for restaurants? I can take my restaurant sustainability metrics and say, okay, we need to make sure we've got something in the chart that reflects that. If it's not here, it ain't going to exist. And if it's over here, you need to move it over there. So that's part of your ACT section. And then finally is impact in investing and reporting. Now, impact investing is simply spending money either internally or externally on improving things. Impact investing means it's intentional. It's designed to make social and environmental solutions, as opposed to, well, we got a more efficient equipment and it saves money. Okay, that it's done to make a financial return, not just to feel good. That there's a range of asset classes, it covers everything, and you can measure the impact, right? So where some of the areas where a company can invest internally in improving is its accounting system, CapEx, treasury and cash management, negotiating debt and insurance, managing real estate, working with suppliers, and public reporting. Okay, each of these literally is an investment issue. It's like, what are we spending now? I'm not good at doing this in reverse. I'm saying, what are we spending now? And what would we spend later? What would we spend differently if we changed? And we need to make sure that we do our math right so that we don't turn down good opportunities because we're not doing our math right. So sustainable CapEx has got a bunch of references to it, and it's worth a class all by itself. And we are going to offer one in the future, so watch this space. So essentially, it always comes down to the comparing alternatives. And the first alternative is don't change. Do nothing. But if you don't change, you're still going to spend money on whatever it is. Like, so for example, in terms of water use, our current practice is we dump the water down the sewer. But we have to pay sewer charges for that. It costs money to dump the water down the sewer, and we have to pay for the water we use, so that's part of it. If we had an alternative of recovering and recycling the water, okay, that's alternative one. And another one would be to change away from a water-based process completely. Instead of using water for cooling, maybe we use a new air cooling system, all right? So we're going to spend money no matter what. What are the alternatives we have? And here again, we use our tools such as life cycle analysis, total cost assessment, doing the right discounted cash flow, and the guidance that are on technical ways to analyze these investments that's in your kit. I want to remind you about the Treasury and Debt Guide. This is just such an interesting thing to me because When you're starting to talk about how does the company manage the money it has in the bank, you're looking for two things. You want to have the most return with the least risk. Well, where that money is parked and how it's being invested is directly affected by all the things we're talking about, isn't it? You want to have a lot of your money in hotel chains that are on the beach? Not a good idea. You want to have a lot of your money in companies that have got new water recycling technologies? Might be a good idea. So think about making sure that you're always engaging the financial functions and the CFO around this, because the reality is most companies get their money from debt, not from equity and not from investors. Okay, so managing debt and managing the relationship with debt providers to show them that sustainability accounting and your leadership is managing and reducing risk. And then you're going to be a hero to a whole bunch of different people in different categories, including the community as well as the finance side. The final step in acting and implementing is reporting. And so there are standards for public reports from a variety of groups. The main one is the Integrated Reporting Council, and their standards are in your toolkit here. There are also specific guidance on reporting on public, on measuring and reporting carbon emissions. A fair number of these. This gets pretty technical, and it's something that you should be engaging in when the company is really ready to get serious at multiple levels. But you also want to look at what are the databases of reports from other companies that you can use to benchmark against. And so the first one is the GRI Sustainability Disclosure Database. I gave you an example of Honda in that case. The two other big ones are the corporateregister.com and sustainabilityreports.com. And both of these have got literally tens of thousands of company sustainability and environmental reports that you can just click on and find them by sector and by age and by location. And I always think this is very interesting to do. Let's say I'm talking about Anthony's Homeport, restaurants. I'm interested in knowing what this restaurant chain in South Africa is doing. I can go find it. What about restaurants in Australia or Germany? How are they different? Why would they be different? You can go look. And that's also where you're going to get the bullets to convince the management that this is important. When the big boys that are in their sector are doing this, the big persons in their sector are doing this, the little guys pay attention because that makes it real. So some lessons learned in reporting. First, material issues are what matters, not everything. It's what's material. And you need to show how you figured that out and being transparent. Make sure there's congruence between financial reports and sustainability reports, if that's relevant to the company. A lot of reports back then had lots of pretty pictures, and pretty pictures are just totally useless and a waste of time. Sorry, that's a fact. Use infographics that convey information and visual concepts. But we don't need to see another picture of a smiling kid in poverty. It doesn't help. Use tables to prevent historical and sectoral data so a reader can see how do you compare over time and to your competition. Don't just tell me numbers, give me context. And finally, report the good and the bad. Nobody believes a report that's all sunshine. There's no such, it's not true. And it'll make anything you say that is true less credible. So make sure that issues of concern are brought up. When you're talking to private companies, it's a little bit different, all right? For employees, you're talking about recognizing and rewarding initiatives. They can make a difference. Focus on the benefits they care about. With investors, you're really focused on risk reduction and performance improvement and innovation. That's what they want to hear. Lenders, they want to hear about risk reduction, and insurers the same thing. So make sure that you understand what audience you want your private report to address and make sure the relevant factors are in there. We talked about the goal being sustainability and the financial statements. I won't recap there, but that's where you want to end up. Let's remember, we always want to make our goal very clear in our program. And I'm going to just come back to this in the quality management cycle, because we have to think about how to do this not as a one-time thing, but that's systematically integrated into the regular things accountants do. And when this happens a year after a couple of years, the accountant becomes possibly, the external sustainability leader and resource for the client, which is a great place to be, because now you can go home and say, I'm helping my client be sustainable. And your kids are going to go, that's pretty cool. All right, so we're getting close to the end. I want to leave time for a little Q&A, and I understand that people often have a hard stop at the end and can't stick around, so we'll just move through this. This is in your book, in the PDF that you're going to have, so you don't have to use this. But again, it's a plan, do, check, act cycle, and at each step we've got references here that'll help you move through it. What you can do for a small business, and I want to give a shout out to my own accountant. Amanda O'Rourke is the managing partner of Greenwood Olin Accountants here in Seattle. And recently she was the chair of the board of the WSCPA. And when I told her and I didn't know that, and I told her that I was going to partner with WSCPA to teach a class on sustainability accounting, she said, did you know that I'm the chair of the board? It's meant to be. So she said, Bert, all of this stuff you're talking about is, sure, it's very interesting, but all of my clients are very small businesses, and I only get 20 minutes or 30 minutes with them at a time. I need to give them 3-4 things that they can do. So respecting Amanda here on planning, find the material metrics, do the homework and say, this is the things that you should be worrying about according to these very important references. Get in there and talk with the staff if you can. Do a presentation in-house and explain to them what you're trying to do, because the one thing is people don't want to improve the company to improve profits, but if they're improving the company to make it more sustainable, they are going to get on board because they like it. Quality doesn't motivate them, sustainability does. Okay, make sure that you check and review with the team what's being done, and then help with the final budgeting. Make sure that they're not doing their investment analysis wrong, because that happens a lot still. So we're coming to the end here. How about that? 8 minutes to go, like I said. We're going to have future classes hopefully with the CPA Society. We'll see how that works out. They've got a lot of other things they need to teach out. But here's a list of some of the other classes that I'm going to be developing and running. And if you'd like to know more about them, of course, you can go to my website, sustainabilitycpe.com, and simply subscribe. And if you'd like to be more involved as a reviewer, as a suggester, etc., you can join on the participate page and tell us a little bit more. And these will be rolled out over the next 6 months. Yeah, get the goods at sustainabilitycpe.com. Okay, and we're going to have the chat box. And so I've got a few minutes here. I realize that everybody probably wants to quit hard at 4 o'clock. If I can't answer your question now, I'll answer it in writing, and then we'll distribute the answers later. So, welcome to any questions or comments, or you want to make a suggestion right now, I'd be delighted to hear from it. And if you like it, at the end of the class here, you're going to be asked to give feedback. You're going to be asked to score the class on a number of standard factors, and then you're going to have a chance to write some personal feedback so far. We want to get other accountants to take this class, obviously, and promote it. So it's those written comments that you have that say you like it, that it's helpful, etc., that we want to use. And if you give us permission, we would love to use good quotes in the future. So shoot away.
And while everyone is thinking about it, I actually have put the evaluation down in the middle. No more prompts are going to play for today's presentation. So the little evaluation is now present to the left of the chat box. It's just evaluation, highlight this and click browse to below. It'll take you to a survey. And that will that'll be where you can enter your feedback. So we find it valuable for, as Bert notes, for promoting these courses and for knowing that this is something that you find valuable. We still do have a bit of time, so if you have any questions, feel free to type those in.
And I know it's a blizzard of information. The most common comment I get back is, there's too much here all at once. Stop force feeding the baby. Okay, we have. Okay. Thanks for the comment. I'm curious to know how this compares to other CPE classes you take, both in the originality. I know the content's original, but the quality of the presentation material itself, is it an attractive? I mean, is it up to snuff and good enough? I've watched a couple of CPE classes, webinars already, and the authors definitely need to take a class on how to make a good PowerPoint presentation. Well, thanks, Mr. G. Assaway. I assume the chat box is visible to everybody, Nick?
Yes, that is correct. Everyone can see everyone's comments or questions, if anyone has questions for each other.
Okay, well, it looks like I don't see anybody else typing now, and respecting that you expect this to end at 4 o'clock, we want to give you time to do your evaluation. So, Nick, let's wrap that up, and we'll finish this up.
Sounds good. So once again, the evaluation is in the eval link. I'm also going to put it here in the chat. It looks like there are, in fact, no more questions. So do you have any final notes you'd like to leave us with, Bert, before I shut the event down for the day?
Well, we're going to do more of this, and if you think you'd be able, number one, are you likely to promote awareness of this class to others? And how does it compare to other CPA options that you have? And if you can use that in your comments in the evaluation, that'd be very helpful for us to know.
Fantastic. Okay. All right, then. I'm going to go ahead and shut the event down. I will note that for CPE purposes, if you got the 3 clicks per hour, so you should have seen more than, but if you got at least 6 during this presentation, you're good to go. We're going to process those. We manually check everything, so it can take a little while until that shows up in your LC Vista page, but you'll see it soon. And I am going to shut the event down and push everyone to that survey. Let us know what you thought, and hope to see you next time. Have a good one, everybody, and stay well out there.
Call me. Bye.